materials business, it offers a complete range of related products, and it holds the largest market share in Thailand's cement industry. For the chemicals business, it involves the production of high-value plastic resins, polythene, and PVC, the key materials used in the manufacturing of various packaging and everyday products. The third one, packaging business, it is the leading producer of fiber packaging and packaging paper in ASEAN. I would also like to take this opportunity to remind everyone to type in your questions in the Q&A box, and we will try to answer them after the presentation. So with this introduction, I would like to hand over the session to Kun Wachara. Over to you, Kun Wachara.
Okay, thank you very much, and thank you for the opportunity to having SCG present the second quarter and first half results for 2024. For my part, I would like to just highlight 3 pages, and that would be the highlights for the first half, the summary for the first half, and the outlook for the second half. So let me begin with the first half highlights. Here, what we've done is we've grouped it into separate business units. For the first business unit, which is construction materials related, what we saw was improvements year on year in terms of EBITDA and net profits. This is despite the lower than expected volume for Thailand and also Vietnam. Okay, so that's a good improvement on our part. The second business unit is the chemicals business. And here you will note that we have a new complex coming up in Vietnam. And this complex has with it the pre-startup costs. So what we'll do is we'll concentrate on the core earnings of the existing chemicals units in Thailand. And with that being said, the performance was positive at 2+ billion baht. And what I'd like to highlight here, which will have further details down the road from my colleagues, is that the chemicals business now is currently seeing a trough. And this is a global phenomenon. And there are a lot of Asian players recording negative profitability here. The third business unit is the packaging business unit, which was spun off vis-a-vis the IPO way back in the third quarter of 2020. Earnings here is also growing. It's recorded positive profitability year on year by 17%. And this is attributed to raw materials sourcing and efficiency related measures. The fourth bullet is also another business unit that we IPO'd in late 2023. The ceramics business, also known as SCGD. SCGD recorded improved EBITDA and earnings despite market softness as well. The fifth business unit is what we call SCG Investments. These are our JVs in non-cores and chemicals business units. And every second quarter, they issue tremendous cash flows in terms of dividends. So we recorded 3 billion plus baht of dividends in the second quarter this year. And before I wrap it up, I'd also like to note that SCG is a growing ASEAN player. Despite the name Siam, assets in Thailand is approaching 51%. And the assets that we have outside of Thailand, particularly in Vietnam and Indonesia, these two significant countries combine a total of 41%. So almost as much as what we have in Thailand in terms of asset base. So we have a tremendous solid fundamental in Thailand with a growing presence in high growth countries such as Vietnam and Indonesia. And lastly, our financial position is very strong. We have cash on hand of just a bit over $2 billion US dollars. And the leverage is fairly low. It's net debt to equity at 0.6 times. On the next page, page 4, just a quick summary in terms of the first half, which is something I alluded to earlier. Construction-related materials, solid earnings despite the volume slowdown. Chemicals, the core is remaining positive. The effort of the company is to push forward with the high value-added products, which is non-commodity, green products, which allows us to lower our carbon emissions while maintaining higher margins. And at the same time, you'll note that our share price has been low. Current price to book now is 0.7 times versus the 5-year historical average of 1.3 times. On the next page is the outlook for the second half of 2024. In terms of strategy, what we will do is push forward with the growth in Thailand and also outside of Thailand. Particularly in Vietnam, we have a sizable operation in terms of cement in the middle part of Vietnam. What we are doing here to increase our volume is we are doing OEM clinker grinding in southern Vietnam, which is a high growth market. So that's something that's in the works. So you'll see further action on that in the second half of this year. Chemicals remains in a trough, particularly in the polypropylene aspect because of the supply growth globally. I think what you see here is that the challenge will remain, and this is a global phenomenon. What we are concerned about is the drop in global GDP, and that will impact the demand scenario. But hopefully, with lower interest rates coming up from the Fed, this might stimulate growth and demand going forward. Okay. From our side, we are embracing AI-driven improvements for cost efficiency measures, in addition to decarbonization activities. We have a few slides for you in the back to show how we are decarbonizing vis-a-vis AI and also green products. And lastly, to mitigate our risk in terms of global turbulences, we are streamlining our CapEx, and we are expected to lower our working CapEx by at least 10 to 15%. So without further ado, I'd like to forward this to my colleagues. Thank you.
All right, so for the performance part, let me starting with the that we mentioned earlier. The aspect from the left pie chart is that Thailand is about 51%. However, for the Vietnam is 29%, followed by the Indonesia is 12%. So we'd like to addressing that we are the ASEAN play. For the right hand side for the pie chart, you may see that the revenue contribution is mainly from the chemicals business. The second one from the packaging business. So the chemical is mainly contribute to our revenue for the first half. The next page, you may see that for the net profit breakdown by that segment at the first half of 2024. Overall, the SCG business is improved comparing to the last year. However, you may see from the chemicals business, the profit may be dropped because of the LSP expense and the multiple tank terminal incident that we have to realize some expense. So if we excluding the two majority costs from the LSP and the MTT, the net profit of the first half will be a positive for the chemical business. And then you may know that in the second quarter, the profit mainly contribute from the dividend seasonal in the second quarter. The majority from the two part, the first one from the chemicals business, and the second one from the SCG investment that I will touch up. So let me start from the chemical association. You can see that our associate operation are very strategic partner to co-element of the overall operation and are the part of our integrated chain. Most of the associates products are the high value added product, or we call it H3A product offering for the downstream and an extension of our upstream olefin chains as well. And this strategic partner will show the successful the long-term partnership with the global players. For example, the Dow Chemicals, the Mitsui Chemicals, and the Tanda Artery. This show the strong and moving for the revenue, for the dividend contribution. And the second part is about the dividend from the SCG investment. These business are contributing our earnings through the equity income and dividend as well. The first part from the agricultural machinery and the solution. The second one from the automotive business. And the last one from the structural steel. So let me share about the performance from first in the revenue from sale at the first half. For the second quarter, the revenue increased about 3% Q1Q, mainly from the higher volume from the chemical business because of the Rayong olefin plant, or we call the ours plants, resumed the operation since the end of March. So the sales volume from the chemical business will higher and then contribute to the revenue as well. And the EBITDA level, you see that the second quarter is improving around 30% Q1Q because of the seasonal dividend. But if you compare to the last quarter, for the last year, the Q2 of 2023, the EBITDA will drop mainly because of the chemical spread will drop and dividend from associate at the chemical is decreasing. And for the profit level, the net profit improved Q1Q mainly because of the seasonal dividend and the equity income as well from the SCG investment. But if you compare to the last year, the net profit decreased around 54% because mainly from we have to realize the LSP pre-startup cost. So you see the details, mainly two items. LSP have to realize some pre-startup expense and interest cost and depreciation around 2 billion baht, and the incident from the NTT expense around 400 million baht. In terms of the capital investment, we would like to share that we aim to have the spending this year around 35 to 40 billion baht, excluding the Fraja acquisition. And the first half we already spent around 17 billion baht already. And for the financial position, you see that we have strong financial position, the cash on hand is around $2 billion at the end of the Q2. And for the long-term debt, we mainly have just like a fixed rate. And the majority from the debenture portion, around 70% of the debenture, the rest will be the bank loan. For the breakdown by the currency, the majority currency is the Thai baht, the rest is about the US dollar. And we just announced the interim dividend this year. We paid around 2.5 baht per share. And the payout ratio at 49% is in line with the policy, right? This is for the financial part. So the next one is about the financial, for the business update.
Yeah, we start with the chemical business. You can see in the presentation that the chemical cycle, now we are in the trough period. You can see that the PE or PE to naphtha and PP to naphtha spread is going down comparing to couple last year. This is because of the incoming of the supply growth from all over the world, especially in China. You can see that most of the capacity will focus on PP, which is lead to the spread of the polypropylene to naphtha to be going down very fast. And for the SCG chemicals earning, as my colleague has been described, you can see that if you focus on the core business in Thailand, actually it's still positive. But if you including the LSP, which is a pre-startup cost, and the MAP tank terminal incidents, you can see that we booked the loss on this half. But we can see that in Thailand operation, we will still make a profit, which is mostly come from HVA and green polymer, which I will explain later on. Let's see about the big investment that we have in Vietnam. The construction has been complete, and we are looking for startup in August or September for restart and test run. The reason that we put down the operation is because we found a safety issue in the operation, so we decide to put it down for the whole complex. But now we are going to restart and test run during this time. Afterward, we're gonna do the commercial operation on October, hopefully. But the utilization need to be fit with the global demand. After we start up all the LSP operation, we have to be optimized across 3 crackers, both in Thailand and Vietnam. And also the team in Vietnam has to be engaged with the customer, I mean the domestic customer in Vietnam, to adjust the product to be more localized regarding to the customer demand. And further, we have the future development of HVA grades in Vietnam also. Looking to the Vietnam market of PE and PP, the market size is about 3.5 million tons per annum in domestic market, which is LSP. We have the capacity about 1.4 million tons. But we have, I mean, in the country, we have the existing capacity about 1 million tons. So you can see that there is some further space that we can have in Vietnam. You can see that the market in Vietnam were very attractive because of the FDI they coming, and the middle class still growing. The GDP is growing very fast, and the urbanization is quite rapid. Vietnam, as I mentioned, it's about 6.9% GDP growth, which is you can see that the domestic economy and the export is very good. And as I said, the FDI is coming a lot. There will be the operation that lead to the GDP, which is manufacturing and service sector. As I mentioned that not only we do the plastic resin, we have done the HVA. HVA came from the high value added product. In the slide, we can see that we do the comparison regarding the commodity and the HVA. For example, that you may see on the screen that the PE, you can see that the black garbage bag, this is a commodity, but the HVA that we're talking about is about the high pressure pipe in the mining industry. For the PP, you can see that the plastic product regarding a lot of things, but what we looking for is the high performance of PP for the automotive parts. And also in PVC products, you can thinking of the pipe, the blue pipe or the water pipe. But we're looking for the more advanced product like windows, doors, or rain cutters. That's the HVA that we're talking about. Furthermore, from the HVA, we have done the green polymer, which is we can separate into kind of 4 types of the recycle of the polymers, of the green polymers. The first one is to reduce. Reduce is to use less of the plastic, which is we put on our own technology, which is called SMX, to make it light, make it more strength on the product. The second one we call the recycle, which is we have two type of recycling. The first one is mechanical recycling, which is you take the recycle products from the source, which is consumer, municipal, or industrial, pass through the technology into the post-consumer resin. We got the partner that we have acquired a couple of years ago, which is the first one is Surplus, the second one is Fast, and we will using or transfer the technology from Europe into Southeast Asia because of there has a mandate in Europe that you will need to use the PCR or the recycling product very a lot, and then we expected that that mandate will come to Southeast Asia very soon. The other one is we call the recycling advanced recycling product, which is we're using the waste into circular naphtha, which is our raw materials. The other one that we are now on process with the Braskem, which is we will do the bioethylene from the sugar cane and cassava. Now we are aiming for about 200 kiloton per annum, which is will be done very soon. You can see that it's not only that we do the HVA, we also do the green polymer to serve the customer that think that the recycle is mandatory. You can see that the recycled polymer or PCR, you can see that the demand growth is about 7 to 8% compared to the commodity polymer is about 2 to 3%. In the past month, we have our MOU with Dow Chemicals to do the mechanical recycling in Asia, and we also joined with the Toyo to do the advanced recycling in Thailand. Okay, I'll move on to the cement and green solution.
Okay, for the cement and construction material related business, let me start with the overview of the cement demand in Thailand. First, for the commercial and non-residential sectors have been going well, supported by the tourism that we can see the more tourists coming back to Thailand and many renovation activities in hotel and shopping malls, especially in the tourist destination. And also for non-residential sector, it's supported by the increasing FDI. So far that we can see that there are many activities happen in the industrial estate, like many foreign manufacturers coming to Thailand to start to build the construction facilities in industrial estate. And for residential, the medium to high segments have been going well. However, there's still some challenge in the low segments due to the high debt level, and also the banks still have the strict policy for issuing the loan. For in the infrastructure sector, that there might be some delay in the government budget disbursement at the first half of this year. However, assuming that like continuing project still going on, we expect that in the second half of this year, they will accelerate the budget disbursement, and we can see some more recovery in the second half. And for the cement business, as mentioned earlier, that we have the green products as the key factors to drive our competitiveness. For the cement, we have the low carbon cement that help reduce the carbon dioxide reduction, and also help us to manage to lower the cost of production. For the low carbon cement, we adjust some formulation and also use the alternative fuel, mainly the agricultural waste or biomass. We can, even that we change the formulation, we can retain the high strength and also use the less energy compared to the original Portland cement or OPC. We launched the first generation of the low carbon cement in 2020. And this past for 4 years, we increased our improvements a lot. Last year in 2023, the portion of the low carbon cement achieved about 70%. And this year, we aim to transform all of our cements to be the low carbon. And just 2 months ago that we launched the generation 2 that can reduce more the CO2 up to the 20% lower compared to the OPC. In addition to that, we have action plan in this year to increase the alternative fuel use up to 50%. And also we plan to boost more of the low carbon concrete as well. The next page, you can see that we also launched the low carbon cement in the ASEAN countries that we have based as well. This is an example in Vietnam that we as the first mover to set the standard of the low carbon cement in Vietnam. This is the multi-purpose application cement that can be used for the foundation, structure, and plastering works. The qualification is comparable to the generation 2 in Thailand. So it means that it can reduce up to 20% of the CO2 emission compared to the OPC. And this is what I mentioned that we use the alternative fuel in the production. In the first half of this year, we achieved 47% of alternative fuel use. Mainly, we use the biomass, for example, the rice husk, straw, and sugarcane waste. As we know that we have the cement plants all over the country, so it means that we can manage the logistic backhauling to collect this biomass from all over area in the in every area in Thailand. And not only the raw biomass, we have the technology to transform this raw biomass to energy pellets. So the benefits of energy pellets is there is more heat condensity. So it means that this can be used more effectively in for the machine in our production process. And this is the green process that the key factors that help us to use more alternative fuel. Because we made the modification of our cement plant, the machine, adding some equipment like a AF burner, for-line bypass, and external combustors. This helps us to use more the green fuel in the production process. And in addition to that, we also use the renewable energy like a solar and waste heat generator to replace the electricity from grid. So all of this can help us to manage the cost. And you can see that the EBITDA margin of this cement business has been improved in this year. And next, maybe let me introduce another business of SCG, which is the distribution and retail business. SCG has a very wide range of network of distribution in Thailand, and we expand this business to the ASEAN country as well. So for the retail, we use the model of a joint venture with the partner, which is the local players in that country. For example, in Indonesia, we have a joint venture which own the shops called Mitra 10 and Depot Bakunan. This is the modern trade shops for the cement and construction materials. This is to increase the channels, the distribution and retail channel for us. And this is the example that how the Mitra 10 and the Depot Bakunan that increase the network in the country. The Mitra 10 already launched the 50 brands grand opening like 2 months ago, and they plan to increase the branches up to 100 branches by 2030. And next, I would like to introduce our SCG new business. It's a clean business under the subsidiary named SCG Cleanergy. SCG Cleanergy aim to be the renewable energy service provider, and not only in Thailand, but also we plan to expand to the ASEAN as well. We start from the green power generation business in the model of the PPA, power purchase agreements, that we have the customers in both the private sectors and also the government sectors. So far, we achieved more than the 500 megawatts capacity and aiming for the 3,000 megawatts in the next 5 years. Not only the PPA business, SCG Clean Energy also has been scouting for the advanced technology for renewable energy to support the current business model. One of that is heat energy storage. So the next page is the example of the technology scouting that SCG Clean Energy invests have the equity investments in the Rondo, which is the tech startup in the US. Rondo owns the heat battery storage technology that to easily simply explain this what it works, how it works. So the green energy like wind and solar will be captured and stored in the heat battery with a very high temperature up to 1,000 degrees Celsius. And it can be released on demand, like at 24 hours, to be used for the industrial use in terms of heat or steam. So due to the very high temperature storage, it can be used for the various applications. And the role of SCG for this, in addition to the equity investor, we also supplying the thermal media bricks for the Rondo. So the heat battery, a part of the raw material for this is the bricks. SCG have the cement plants that inside the burner, it includes the like refractory brick. We use this technology and co-develop with the Rondo to make the heat battery. SCG also will use this heat battery storage in Thailand in our cement plants, and we plan to commercialize this early next year. So this will be the first use case in Thailand and will be then expand to ASEAN later. So I already mentioned that this technology can be used for the various applications. So it means that there are many customers in various industries that can use this. Currently, the SCG Clean Energy also engaged more than 50 customers in many industries like F&B, cement and building material, and even the textile business. And we will update like continuously and frequently that how we secure these customers. So this is the big rough summary of how and what SCG Clean Energy is doing. For the base, the business, we have the PPA from solar, and also we can expand to the wind as well. So to support this PPA business model, we have the enabling technology like a Rondo heat storage battery, and also we have another technology called the grid modernization, which the system to help manage a peer-to-peer selling, electricity selling. That, for example, if we, let's say if we installed our solar inside our sites and we have excess capacity, we can also sell to peer.
Yep, we can see that we can do the green polymer, we do the low carbon cement, or a new process like SDG Clean Energy. You can see that SDG has been targeted to net zero in 2050. You can see the roadmap and progress here. In 2030, we expected to reduce 25% from 2020, which is now we are underway to decreasing the carbon dioxide emission. And I think we are underway to make it better afterward. after 2030. And we are looking forward for the operation, which is next to what we have, is to be green and also profitable. For today, I think this is most of the presentation that we have. I think next to be the Q&A session.
Okay.
Hi. Yeah, thank you to Kun Wachara and team for sharing the financials and the various green initiatives. So it is heartening to know that the Siam Cement Group is driving various green initiatives to help combat climate and global warming. So with this, let us move on to the Q&A. So in the Q&A, there's this question. How does the company expect government budget disbursement in the second half of 2024 to benefit the domestic cement and building materials business? Are there any key projects or industries to monitor closely?
Okay, I think I'll take this question. I think that we are aware that there is a change in government as of yesterday. There was a court case with the prime minister, so he is no longer there. I think going forward in the next few while, there will need to be a new prime minister. And the reason why I say this is because we will need to wait for the policies to come out in terms of what sectors of the economy will need to be stimulated. From the past, when there is a acute need to stimulate the economy, in the past, what the governments used to do is to do multiples and numerous rural projects to stimulate the economic activity at the grassroots level. So that might be one option. In terms of big projects, there are several big projects, but these big projects, which has already gained budget approval, they're multiple year projects. So this is in the existing backbone. I think what we're looking for is whether the demand will be XX% year and year and so forth. That would need to be weighted. But you'll note that despite the 10% drop in cement demand for Thailand in the first half, our EBITDA and net profit actually increased. So what that means is that despite challenging backdrops, we will still move ahead with the low carbon cements. And we'll wait to assess the new policies going forward. Thank you.
Okay, thank you. Let's see. There's another question that came in. Sorry, it's not showing up in the Q&A, but the question itself is, are there any plans to distribute the low carbon cement in Singapore and Malaysia? Because I think in the charts, in the slides, right, it showed there are some ASEAN countries that you're distributing. So just wanted to know whether are there any future plans to distribute it to Singapore and Malaysia?
Oh, definitely yes. Let me begin by forming an understanding of how we strategize the low carbon cement. As mentioned by my colleague, it allows us a more competitive cost structure, and also while reducing the carbon footprint. So it's like having your cake and eating it too. That's how we look at it. The initial phase was to launch it in Thailand, which we've done successfully. The penetration rate of low carbon cement in Thailand has reached above 80% now. Okay. The next phase would be to launch it in neighboring countries where we have production facilities. So that would be Vietnam, Indonesia, Cambodia. You asked about Malaysia and Singapore. We do not have production facilities there, but obviously, we can always export it into these markets if there is demand for these products there. You'll also note that our product is certified by the EPD. In fact, some of our products actually land on the west coast of the US. So it's very well accepted. And the reason why it's accepted is because if there are certain projects in the US where every single building material in that building needs to be low carbon. You're looking at low carbon ceramics, low carbon walls, low carbon roofing, low carbon cement. We fit the bill. So to answer your question, yes, potentially down the road, vis-a-vis the export routes. Thank you.
Okay, thank you. There's another question that came in. So considering that some companies in Thailand have recently faced liquidity issues, what strategies does the company have in place to manage debt and maintain liquidity over the next 1 to 2 years?
Okay. We don't foresee this as an issue for us. I'll answer it in multiple aspects. One is that all of our businesses are generating good, healthy cash flow, but just at a lower level. Okay. The second aspect is that our leverage is somewhat competitive. We look at net debt to EBITDA. That's 0.6, 0.7 times. It's always okay.
Yeah.
And thirdly, when you look at the long-term interest rates for us, it's very competitive. Most of our debt is at fixed rates. So that's the top right-hand corner. In the lower right-hand corner, 76% of the loan is in Thai baht. And particularly in Thailand, when you look at the Thai baht aspect, and on the lower left-hand side, 70% of the debenture, so let me say that again. 70% of the long-term debt is in the form of debentures. These debentures have a very high resubscription rate, something that we've done since 1999. The current resubscription rate for our debentures is above 90%. And once we issue these debentures, which we do every April and November, it's fully sold out and fully subscribed within a few minutes. So we don't foresee that as being an issue. And lastly, I mentioned earlier that we have slightly over between $2 to $3 billion in cash on hand. Thank you.
That's right. So thank you. Okay, we have one more question. What is the company's dividend payment plan for 2024? And what is the target dividend payout ratio relative to net profit?
Yes, I think I'll have my colleague help answer. Thank you.
Right. So you see on the right side for the bar chart, we had the dividend. We have an interim dividend announced about the 2.5 baht per share already, and this is in line with the dividend policy because payout now is around 49%, and the policy of the payout ratio is 40 to 50% of the net profit. So it's quite in line, and I think it's aligned for the policy as a group. Right.
Okay, thank you. For the rest of the audience, do you all have any other questions that you all like to pose? You can type in your questions to the Q&A. So while you're putting up your questions, let me just talk a little bit about the SDR, the Thai SDRs that we are quoting on SGX. So if any of the clients here, if you're interested in adding Siam commercial cement to your portfolio, you can head over to the POEMS website at www.poems.com.sg and look for the ticker TSCD. Right? this is the ticker code for Siam Commercial Cement. So for the SDR. So alternatively, you can also go to the SDR website at www.singaporedr.com to explore the rest of the other Thai SDRs that are quoted on the stock exchange. Is there any other questions? Okay, I don't see any other questions coming in. So, let me conclude. So in conclusion, I'd like to thank Kun Wachara and his team for sharing with us on Siam Commercial Group. So hope that the opportunity to invite Kun Wachara and his team back again to our future SDR lunchtime webinars. So lastly, I want to thank everyone again for your presence and for taking time to attend this webinar. So thank you and have a good week ahead.
Yes, thank you for everyone for attending and the host. Thank you very much. Have a good day. Bye-bye.
Bye-bye. Thank you. Thanks, everyone. Okay, thank you. Thanks. Thank you very much.
Thank you.
Thank you.
Okay, bye-bye. We'll leave now.
Bye-bye. Thanks. We'll talk again. Thank you.